Righty-ho, guys. So we've got Andre back on the show for what is one of my regular updates on my trading for a change. We're going to see, actually, it's a bit of a different episode. So we're going to walk through my trading of the last month and a bit. So I tried to give it a good nudge and be consistent in terms of my approach to jump in the markets and actually play some trades on a regular basis with a bit of rigor around it, or as much as I could put. And today we're going to walk through that and just see what Andre's take is on some of the trades and some of the entries and some of the stuff that I've been doing, which I've got to say was a bit more difficult than I would have. I've made it a bit more difficult than I should have probably made it. But we're going to walk through that today and see if you guys can take out some lessons from what I'm doing wrong, so that you don't do the same things. So how's it going over there, Andre?
Phenomenal, Cam. How about yourself?
Oh, great, mate. Yeah, really good, really good. Heading out of winter here, so we've got a few storms coming in, but other than that, it's we're looking forward to summer. So all good. Football season finished as well, so I'm now into summer soccer, which is always good fun as well, because you get to actually play on something that's not just a mud pitch. Righty-ho. Let's get into this. So I know we've only got a short amount of time, so we've got about 40 minutes here that we need to whip through. So Andre's kids are in the background as per usual, which is always gives us some added after effects. Hopefully we don't have World War III going on back there. Right, so let's get into this. So this is my account you can see on screen. So this is the chart. We're going to go through the actual trades on a chart. So there's going to be a video recording available for the guys that are on the Pro membership. Everyone else is going to hear this show on the podcast. So, right, Andre, I don't know. I've sort of set everything up, and I'll have to sort of make these charts a little bit bigger so that people can see them. But we'll go through my trades here. And I'm just going to drag them onto the screen. You can actually see the trades on the screen that I've taken, which is quite handy. So let me think.
Well, let me ask you a question.
Yes, go for it.
Okay, so what was, how do you see this chart? It was probably the biggest thing is how do you see this chart?
Right, so this is what I did. So my approach was I'd go, let's just take this one here. So I'd go onto the daily to start off with, and I'd go, right, let's get the overall trend. So I'd draw some trend lines, trying to connect as best I could and think, okay, well, we're miles away from this one, so that trend's not going to hit anytime soon on the daily. So I'd probably go back and go, okay, well, let's think, okay, we're probably going to be moving back to this trend line here. So draw a couple of trend lines on the daily, and then I'd draw a few support and resistance levels on the daily. So I'd be looking at that as a level. I'd be looking at something like potentially like that one there. So I'm looking at the connection here, the connection there, the connection there, going, okay, we've got a couple of hits. This one's sort of, okay-ish there. There's a bit of resistance there and support here, so that's all good. So we've got a downward trend, we've got a support and resistance, so it's most likely sort of in this little channel here and probably heading upwards. So in this case, I would have been looking for buys, and I'd be saying, right, I'm writing down on a bit of paper, we're looking for buys here. Then I'll drop down into the 4 hour, do the same. And so looking at any trend lines, and I'll try and usually zoom out a bit and go, okay, well, we've got a bit of our upward trend here, so I'd be drawing this in. And think, all right, we've got a bit of a wedge happening here. So once again, this is confirming that we're going up again. So this is looking pretty good, but unfortunately, I've missed the touch of the 4 hour trend line there. So I'm now jumping into the hour. Actually, I probably would have drawn another support and resistance here, thinking that we've got support here, and there might be another one in here that I could have picked. Possibly this one here, looking at that and looking at that. Then I would have jumped a bit further down. I won't go into too much detail, but we're getting quite a few lines on the chart here. So hourly, I would have... Did I draw? Yeah, I drew lines on the hourly as well. So I would look for support and resistance on the hourly. Taking that one there. 1, 2, 3, 4, 5 sort of hits on that. Potentially 6, potentially 7. Always thinking, okay, I'm going to go up, and then I would have dived into the 15, and I would have actually used a Fibonacci on the hourly to give us a some other levels just to confirm those levels. So I'd be looking at on an hourly. This one here, what would I've done? That's a good call. Here I would have probably looked possibly at. I don't actually know. I probably would have been a little bit lost at this point.
Okay, that was going to be my next question. I'm going to ask: is your brain kind of jumbled when you're looking at?
Yeah, well, now it's like now I'm sort of going. I started colouring in the support and resistance lines and go, okay, well, I'll do different colour for 4 hour, different colour for daily, different colour for hourly. So at least I know that if that trend line's been broken, it's on a daily or an hourly or 4 hourly. The Fibonacci, yeah. So actually, the Fibonacci, I would have done it. Now I think about it, I would have done this because and then I'd leave them on there, and I'd try. And then so the next day I'd come back and I'd be like, hang on a sec, why did I draw these lines? I can't remember why I drew the damn lines. What was this Fibonacci connected to? Or what was this support and resistance or trend line connected to? So yeah, I was getting a little bit confused. I had so many lines on the chart. And then I'll be looking here for an entry using sort of candlestick patterns, so a confluence approach. And once again, I'm sort of going for buys. I'm now going, okay, well, I can't really buy here because it's just had a massive bullish run. So I'm now going, okay, well, I've got to wait on that one, and I'd possibly go, is there an entry opportunity or not? And in this case, I would have probably gone, okay, well, there's not. I've got to wait for it to retrace back to one of these trend lines at least, and then possibly looking for it to go back here and bounce off that, and then take the profit up here. That was 2 months ago, and I had other issues around money management. So I said to myself, right, I'm just going to start off with 0.01 lots, and I'm going to trade that for a week. And then the next week, if I'm profitable, I'm going to jump up to 0.02, and then jump up again to 0.03, and so on and so forth. It took me 3 weeks to get to 0.02 because I couldn't stay on 0.01. Which, it was not a good sign. I mean, so this was the first approach. The second approach, I stopped using Fibonacci. So I wasn't using Fibonacci. I was using, so I just sort of moved that away. Then I started stacking my trades. So if I can get an example here, what's a good one I did? I think it was a new J. Yeah, so this is a smaller example. Oh, no, it's a good example. So I started stacking the trades that were going against me. So, for example, if a trade was going against me, where is it? UJ. Here we go. If a trade was going against me, I would start waiting for it to move, say, 3 or 4 pips against me, and then enter another trade in the same direction, hoping that it would eventually get back there. Now, I'm trying to find where my trades disappear to on this chart.
I already have an idea for you.
Yeah, go on.
Let's simplify it a bit.
Let me just see if I can find one of these trades. So these, I don't know where they've all gone now, but
don't worry about it.
Yeah, so I'll find them. Where are these trades? Here we go. Right, so you can see here if I zoom in. Okay, here we go. So here's a buy, right? So I entered here. It went against me, and then it was what? This was 8 pips against me. So I entered another buy. The next candle, I entered. Oh, actually, I entered 3 times here. Sorry, you can't see these ones, but there's one here. One here on that candle that went against me again, and this one finally went against me, and the price finally turned back. Now, I must have, in this particular instance, had some confidence. So I entered a buy here, and that one was a successful trade. And this was, I think, on the 5-minute chart. That was 18 pips. So I had some confidence it was in a bullish move here, and that it would come back. And so some of these, that got to break even, exited. That one there I left in. Exited that at break even. So overall, this group of trades would have probably made a profit. It definitely made a profit, but the risk eventually got to me with this approach because I was stacking in the wrong direction, and eventually, if the price goes too far against you, you've got lots of trades in the wrong direction, and then this happens. This big drop at the bottom here, where you've just completely screwed yourself over. So, what's your idea anyway, Andre?
Okay. We're going to simplify it a bit. What I mean by that is you have a lot of ideas going on, and I want to challenge you a little bit to see support and resistance not as a line on a chart, but more as a zone, right? And what I mean by that is I'm going to share my screen if you don't mind, okay?
Yeah, go for it.
I'll share my desktop. Oh, I did it right. Proud of myself.
Well, superb.
Cool beans. So this is what I mean. I'm gonna start off with the naked chart. What's your pair?
I was trading mostly GJ in the end, but I had about 6 or 7 pairs I was looking at.
I don't think this account gives me GJ, but let me see. Chart.
GU was fine as well. GU was another one. I was trading quite a bit.
So cable?
Yeah.
Easy enough.
What? Oh, my candy.
I mean, the good thing is, as you would have seen with the statement, I was able to be consistently break even for a good 4 or 5 weeks before, maybe even 6 weeks before I finally sort of hit the wall. But I mean, break even just wasn't. I mean, the approach I was taking, it just wasn't working. I knew it wasn't sustainable, and the fact that I couldn't actually grow it was, there was no, really doing anything.
No biggie. So this is what I mean. Let's start top down, because we are at an interesting point in both euro and the pound. So what I mean by, instead of putting a line on your, because for me, this is for me, this is what I found out, is when I had support and resistance merely as a line on my chart, I expected immediate reaction, right?
Yeah.
Price does what it wants now, but I want it to do. So I started looking at support and resistance as a zone. And that's why I kind of say it's a hybrid supply-demand zone. You can call it what you want, supply, demand, support, resistance, right? So look, we have exhaustion right here on the monthly. All right. We have the same kind of phenomenon and a price response right here. So
I'm sorry, why do we have exhaustion, just so that everyone can understand that?
So look, it can't, right here, price is trying to run up, and it's not successful. Just flat out not successful at running up. So the price response right here validates that for me.
Right.
So what I would have done is just left my level like this. But I recently asked a futures trader his opinion on my strategy, and he gave me a tip. He also told me to look at the significance on this of my level. And what he meant by, he told me to take my level back further to the left. So now I'm going to take my level back to the left and see what kind of price response I've had at this price point. And I totally screwed my level up. Let me make sure this is off. Dun, 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 dun. Oh, I'm on a monthly, so never mind. Weekly.
Okay, so, might have to start here.
Yeah. It's been resistance. Let me go back some more. It's been support here.
Yeah. Wow, you're going back quite far, eh?
Yep. I want to see the significance of this level. I'm going to go back to the monthly and continue to extend this out a bit. All right. Weekly.
So for the guys that are listening that can't see this, so basically, Andre's, there's a big bearish bar that's gone into a zone, and the zone, I suppose, is the last sort of 3 or 4 bars after the big bearish bar have tried to go a little bit higher with their wicks. They didn't quite make it there, and then it went back down a bit further, then tried to come back up again into that big bearish bar, and it then finally went south. And we're on the weekly chart on GBP USD. And today's I think it's the 19th of August.
I couldn't even tell you.
Yeah, neither could I. I think it's the 19th of August.
So to keep going, also what I'm looking at is...
Oh, no, it's
all right.
the 12th, I think. Anyway, sorry.
Oh, wait, is it? I couldn't tell you.
Oh, no, 14th, 15th.
Somewhere around
15th, yeah.
So I know that if I take a short right here, that based on what prices show me right here, not my personal opinion, right? Not any candlestick pattern, not any anything but the data that's on the chart. What it's telling me is right here, we stopped, and this price point right here was the catalyst to drive prices up into this zone that we marked on the monthly, right?
Yeah.
So what am I going to do? Same thing. Put a zone here. But I'm going to take it back. And it's the common phenomenon of the market to use supported resistance. So I know that if I'm short right here, and if I'm a swing trader, I'm going to probably have a price response right here because this has been shown to be resistance and also support.
Yeah.
So let me go down to the daily. And it's a pretty big range. That's a very tradable range right there.
So would you always start off on the weekly?
Lately I have, because price has been in these areas. And that's why it's kind of important for me personally to always be in tune with the kind of overall price structure or not price structure, but movement and overall levels that price is at. And I'm going to give a lot more focus and attention to the higher time frame levels than I will the smaller time frame levels right now, especially with the euro and especially with the British pound, because they're all kind of finagling around in these zones right now that are providing great opportunities to get into the market. So now I am on a daily chart. So what, 1, 2, 3, 4 sideways. Today is very, very bearish too. So kind of the same thing. I like this level better.
So we've zoomed in here just so the guys can understand if they're just listening to it. So we've zoomed in here and we've got what looks like it was on a little upward trend on the daily chart, and it came back down to a point where it was essentially a fractal where the point, it turned, the market turned, and Andre sort of focused on that particular point where it turned, and then went up to, so we drew that as a zone. It went up to another zone where, which was the zone we drew earlier, and it's come back down a bit, maybe 5 or 6 days, 6 or 7 days. Mm-hmm. Yeah.
So providing very good opportunities. So now I'm on a daily. I'm looking at the significance of this level and deciding if I want to kind of keep it around.
So we're drawing a smaller level on the daily around that level that we talked, that sort of market turning point we saw on the weekly. And is it significant? Let's drag it to the left, and we can see that it is significant. There is another turning point for that level there as well.
Yeah, and it's based around the phenomenon of support flipping to resistance. This could be a significant level, but again, there's another level right below it that could be. I found that in my back testing and on my studying that when you have levels close together, a lot of times, to the tune about 70 to 80% of the time, it goes for the lower level. But that doesn't mean that I would take a smaller trade counter trend to capture some volatility and get out quickly. So
I suppose how do you work out how big your zones are? I mean, when you're drawing on the chart,
it's the time frame that it's on. I let the time frame dictate that. So the very first monthly zone that we drew was literally was this area here. So to the point of exhaustion, to the top of the wicks, literally the top of the wicks. And when I stretch it backwards, you can see that price literally touched this area and came up, came back down to another level that I probably would have marked too, but right now it's not too important unless price totally just smashes through this level right here.
Yeah.
So I'm not going to really worry about that just yet. Does that make sense?
Yeah.
Okay. So let's go back to a 4 hour.
So it's almost sort of just creating a virtual box around where the wicks connect with each other historically in time, sort of going back and then obviously going forward as well, or current where price currently is.
Okay, cool. So I really like this level here. I like my levels. I'm seeing support flipping to resistance consistently, showing very bearish activity. 1 hour.
So we're on the hourly now.
We're basing. Could have a pretty good move this week. In what direction? I don't know. The market will tell me. And so I'll tell you how I would enter based on my zones.
Okay, so we're going to jump down to the 5 minute.
Now let me find my zone. Here we go.
Okay, and we can see the big zone that Andre drew earlier on with a massive gap and a bearish move down out of the zone.
And let's see here. So
that's about 7 day, about a week before where we are today. We're looking at, yeah.
So what I like to see, your typical supply and demand trader wants price to fall away and then come back.
Yeah.
I don't like that, and I'll tell you why. Is because the longer we are away from an actual price level, I think it's less significant. I like to see an immediate retest, maybe within a few minutes, maybe within a few hours, maybe within the actual day, to get in the trade. So once I get a break of my zone, and I see an immediate retest, I let price fall away again, and then I enter short. I actually enter on the 1 minute. Here we go. So as soon as I get a break outside of my zone, this candle right here, which is 132,383. That's my cue to go short. Where's my stop going to be? My stop's going to be literally at the edge of the zone.
Right. That's pretty tight, eh?
But it's based on price behavior.
Yeah.
Right. I know that the market tried to make another run up at this level when it couldn't do it. So cool. I'm okay. I'm literally okay. And as it moves into profit, I'm moving my my stop down based on how price is behaving. If I continue to see support flipping to resistance, I'm staying in. One thing that I do want you to look for as far as patterns go, Cam, is, and I'll actually send you some information on this. I don't think you can probably share it, but I'll send you some information on this from my Google Drive.
Okay. And so at this current point in time, what would you be doing with this pair, like where the price is now? Because it's not in a zone, it's not near a zone, sort of in the middle. What would you be doing?
Let me look.
So Andre's just flicking through charts now, trying to work out which one to hone in on. Would you be looking for a trade now, or would you be going, well, it's out of the zone, I'm just not interested?
I'm not taking anything right now. Here's why. This is a very tradable zone. But again, I do see a price behavior that I like. But it just looks like it's sucking in. So very logically, let me mark this. We're sucking in the buyers at this level here, right?
Yep.
It could be anything. It could be to make another run at the highs. It could also be to clear out, to make room for the market to go lower, because we have a good amount of levels of bullish price response. So we could be sucking the buyers out of this level to make room to go lower, which it looks like if that's what it's doing, because we haven't breaking.
And so when you say sucking the buyers in, I mean, how do you determine that?
Think about it this way. where are you told to put your stops? Above a swing high or a swing low, right?
Yeah.
So there's probably also orders, limit orders, expecting a run way back up here. There's probably also people that are trading at the market for a bullish response. And that's what I mean by sucking in buyers. The market's literally doing what it's supposed to do, filling orders,
Yeah.
just filling the orders. And that's why we're overall, the volume is stable, very stable, very sideways movements.
Yeah.
And it's expecting this kind of this fractal area right here. It's literally a drop, base, drop, base, drop, base, drop. We're respecting the basis right here.
Yeah.
Right. So if we get a violent price response, okay, I'd be looking at this base to see if it holds, to possibly take a short. And I know that based on the price response, it could. So I don't subscribe to the thought that the more touches, the stronger a level is. I think it's the exact opposite. The more touches, the weaker a level is.
Right.
I just find that works for me personally, and it's extremely logical. So what will probably happen to this level? It'll probably flip to resistance if it does do that, right? We'll test the rally, base, rally, right? We'll test this area here, and that's exactly why I have a zone marked here. I would probably target the top of the zone or like shortly before, because I do have a little bit of a base right here. And this is a 4 hour. So I'm pretty confident I'll get a price response right around this area right here, even right here. So I would monitor the behavior right here, but it looks like price is sucking in what's here from here. So even right here, right? Look at this candle right here. We had a very nice run right here. So without me being able to see real-time volume, without me being able to see the orders, the data on the chart told me what happened right here. Also, the data on the chart told me what happened right here.
So these are big candles that sort of signify the very lowest point in a upward trend on a, I suppose, what would you call that? Just on a retracement, basically. And then it came back. I mean, when you look at it from a market structure point of view, it's sort of almost like a head and shoulders. Well, there's a head and shoulders in there, and so there's other things that people are probably quite familiar with.
Probably shorting the neckline and getting stopped out. Yeah. Because they're thinking from the traditional things that they're taught. For me, they just don't freaking work out.
and why don't the traditional things work out?
I couldn't tell you that, and I think it's always a function of the money that's available in the market right now, and also a function of the overall bigger time frame. So if you're expecting a crazy bullish response, logically thinking, let's go back to the daily chart. 1, 2, 3, 4, 5, 6, 7. A week of very, very, very bearish activity. We need pullbacks, right? We absolutely need pullbacks, but it's failing to run higher. Now we're just kind of basing sideways. I don't know how long we're going to base for, but to me, if this level breaks down, we're going to target the next level. And it's something very interesting Nick says, if we don't break the highs, we tend to test the lows. And that's probably what's likely to happen if this level doesn't hold. And again, I think the traditional stuff doesn't work just because of the liquidity that's in the market. Because hindsight's always 20/20, right? Yeah. I could have took this trade here. I could have took this trade there. Well, the thing about trading or anything is execution, right? You got to execute it to validate your idea. And I find that for me a very logical approach, knowing where stop losses are going to be clustered, knowing where people are likely to enter, just based off all the trading education, I can have a very logical approach to the market. So that's what I would challenge you to do, is cut out the Fibonacci. There's too much stuff on your chart, even the trend lines. I just don't find that the market respects trend lines. But I do know some people that can trade trend lines. But again, not thinking about trend lines, you can see the response points as clear as day on the higher time frames, right? You can see them. I don't need a trend line to tell me where the liquidity's at.
Yeah, because I mean, I found the trend. I found that was quite correct. I mean, the trend lines weren't respected, although they might have been respected. You know, you've got the start of the trend line, you got the second hit of the trend line, that's respected, and then you can actually draw it. So then you're sort of hoping that the third one respects the trend line, and sometimes it does, sometimes it doesn't. It depends on the time frame, and it might respect it on a higher time frame, but then it doesn't respect it on a lower time frame, and so it's unless it's going to respect it at that third time, you pretty much can't use a trend line, which
Correct.
was a bit of a pain in the butt when I was doing it because I started using trend line channels as well, which I thought worked a whole lot better. But then I found that even the channel wasn't being respected, or it'd just fake you out, and it would look like it's on that third hit. It would look like hang on a sec, it should. Well, actually no, because a trend line channel, it does allow you to then take that second touch because for the guys not familiar with them. So it's basically you draw your first trend line and you take the slope of the first trend line and move it to the top. So you got point one, you got the second point, so you move it to the second point before it goes on an upward trend, before it goes lower, and you take that same slope and connect it to the first point at the top. So then the next time it moves up to the top, you should actually expect a bounce. So you're sort of preempting that sort of second touch. But even that wouldn't hold sometimes. Or it would fake you out and it would go way past it.
And you know
like,
why it fakes
I'm
you out
out.
typically?
Yeah, why is that?
You see the two red lines I just drew? It's
Yeah.
support becoming resistance. This level of resistance, it became some kind of a price support that helped price come this way. But again, it flips to resistance. So what are most traders seeing? Trend line bounce. No, you're not seeing a trend line bounce. You need to be very well aware of the levels that price is respecting more so than a trend line.
So is support becoming resistance? So, yeah, I see. Yeah, okay.
They call them traps. I've heard them referred to as traps. But again, it just comes from seeing a stupid diagonal line. I'm not going to call them stupid. That's very rude. Diagonal line. And you're expecting the market to go to the moon, but we're not thinking logically. It's ridiculously bearish.
And but then the ridiculously bearish is based on the three big bearish candles that have taken us down from out of that zone, basically.
And more so this.
The big two big bearish candles and yeah. So we've gone south for the last on the higher daily time frame. We've gone south for basically 5 or 6 days.
Right. So find a resistance level. Wait, hold on. I get those terms mixed up so much time. Find a resistance level and trade with the trend. There's nothing wrong with scalping against the trend. I scalp against the trend all day long. But if you want, like my buddy told me from Canada, if you want longevity in the market, find a point to go with the trend.
And so at what point did you establish the trend in this discussion?
On the weekly.
So how did you go? The trend is down on the weekly just by looking at the last 3 candles, or were you looking at sort of
that rejection off of the zone already drew?
Okay,
you can see that we built kind of a base here, and we fell away pretty sharply. So what's likely to happen? We're probably going to fall away because we spent a lot of time. The amount of time that price spends at a level is important. We neglect to think about the factor of time, but no, price spent some considerable amount of time in this whole area. So expect the price response. And this is a weekly area right here. So again, let's think logically. We're likely to be able to take a short somewhere in here. I hope that makes sense.
Yeah. So what if you drew that zone back in time and it didn't show any positive, support or resistance? What would you do? Would you delete it, or would you go, well, it's actually, I still believe in it, or not?
What I believe doesn't matter. It's what the market's going to do that matters, right? And the overall what the market wants to do. What I believe doesn't really mean anything. So I would kind of just watch the behavior of price, and if I see something that triggers 1 minute chart, for example, excuse me, I see a fall away like this. and then an immediate retest. Okay, there's something significant happening up here. And I can distinctly see a level right in here that will provide me an opportunity to get short. We've already drew some of the liquidity out that was right around this base rally area here. So cool. I'll probably get a pretty good price response around here. I know my trade's going to have trouble right around another base rally, right in this area here. And look, we get a price response. We don't go anywhere near the highs, and we start tumbling lower, right?
Yeah.
But we've already drew the liquidity that was in these levels out, so we're going to go towards the lows.
So I'm starting to see it now. So it's really those levels, those little zones that we're looking for that tell us where price is going to go versus a specific point, like a thin line that comes across a chart. A support and resistance level is not just, and I've heard this before from other guys on the show that you can't just draw a support and resistance level at a particular line. It's never gonna hold that line. And I suppose sometimes it's easier to use the little tool that draws the line than it is to draw the little box that becomes a little bit uncontrollable on the screen. So it's putting in that little bit of extra effort to get the box in the right position that might be what's needed. And in terms of the things like that I was doing with stacking orders that were going against me, and
it's all because sometimes we think we're right, but the market's right, we're not. Market's always right, we're not.
So and that makes perfect sense. So I've got to sort of look at it like, at the end of the day, if I'm wrong, I'm wrong, but I need to know when I'm wrong and get out. And accept the fact that if I don't risk that much, then I can be wrong 100 times before I'm right. And I might be 50% into my account balance, but then I'm obviously doing something. I obviously need to stop and think about how I'm approaching this thing, and maybe change the whole sort of mindset and philosophy. Which what you've got here, I think, is a good demonstration of really understanding price movement. And I know other people are sort of out there, and everyone believes what they do. If they can make it work, they believe that it works. But I mean, this is probably the first time I've gone through a course before with a guy on the show called Hishu Han, where he did talk about. I
remember that interview. I like that.
Yeah. He's an interesting character, and he taught a bunch of guys how to use supply and demand trading, but I think some of us came away just not quite understanding the intricacies of it, which is what you sort of go through and explain and really try and get into people's heads, because I think it is quite a difficult thing, because it's sort of like there must be a light bulb moment that goes off where you start seeing the chart in a different way than everyone else. It's almost like reading sheet music, right? It's like a skill. So once you know how to read sheet music, you can read it. Not that I can read sheet music, but I'm assuming that I look at it and it just looks like a bunch of things going up and down. This is for you. This is like reading sheet music. You now understand how to read the price bars on the chart without changing them to Heiken Ashi or Renko charts. You understand how to read the price movements based on just what they are, the raw price movement, which is a skill to have, like riding a bike is the way I sort of see it. If you can understand how to ride a bike, you never forget. And I think that's what a lot of people are trying to find is, how can I actually read these damn bars on the chart?
Yeah. And you know what? I am working with my buddy Dan. I might be trying to translate this to a Heiken Ashi chart for those who are just overly emotional. So that might be in the works here soon.
Okay, and is that to help people sort of see the trend? And
go, or just overly emotional and see a bullish candle and be like, oh my God, I'm freaking out.
Right.
So possibly, but Dan, I love you. Just so you know, if you listen to this.
Okay, so if you had to give me sort of like 5 things to go away with and think about, what would they be in terms of what I was doing? Because I've stopped. That account, as you would have seen earlier, guys, I blew the account. It's I've lost count now. It's probably number 3 or 4, probably number 3. Now, what would you recommend I go away and do?
Get rid of trend lines. Number 1, they limit your thinking. They make you think that you're going to be right. Start looking at support and resistance as a zone. Stretch a level out in time. Study the drop pattern, rally pattern. Work on understanding where the liquidity's at and what price is actually attempting to do. Higher time frame premise.
Just writing those down. Higher time frame premise. And so the only one that I probably would need work on is the liquidity thing. For some reason, I just can't. I can't. Yeah, I can't get my head around liquidity for whatever reason.
Everybody keeps their stop beneath this a swing low or a swing high.
So that's the secret. Everyone has got their stop there, thinking it's not going to go past the swing low, swing high, and then it does, and they get stopped out.
Mm-hmm.
Right. Okay. That's probably why I went okay with my stacking of trades, because I wasn't putting a stop loss in, so I couldn't get stopped out. I think that's like why I was actually staying in.
We don't have one.
Exactly. The broker's going, hang on a sec, mate. Wait, where's your stop? When are you going to put that in?
I don't think they ever crap.
Yeah. Okay, look, thank you, Andre. Hopefully,
my pleasure, Cam.
The guys on the show today did learn a lot out of this. I mean, I've definitely have to sort of step back and I'm going to work with you to see if I can just crack this damn thing.
Yeah, I'll send you some information. I don't think you're going to be able to share just because
it's fine.
Mm-hmm. You'll see once I send it to you, but I'll email it off to you here shortly. But I do got to run to get my children to the doctor.
Okay, cool. All right, Andre, look, thank you very much. We've got this recording coming up on the 52 Traders website for pro members. So if you're a pro member, you're going to get the full recording. If you're not, you're going to be able to hear this full episode, and hope you enjoyed it, guys. Okay, Andre, signing off.
Thank you
very much.